Sunday Strategy Digest, the month in review updated the 5th of July 2026. Cosmic Algorithm Limited, Backseat Trader. This month's dashboard update shows continued progress since launch in October 2022, but the more important message is short-term discipline. The strategy has continued to compound over time, while also absorbing a sharp recent portfolio decline linked to renewed pressure across Nasdaq 100 technology and semiconductor leadership. This is not a forecast. It is a review of whether the process remains consistent when market conditions become more difficult. As of 17:03 on Sunday the 5th of July 2026, the dashboard shows an annual growth rate of approximately 26.5%, and a cumulative gain of approximately 101.5% since October 2022. Maximum drawdown remains contained at approximately -11.0%, while the rolling Sharpe ratio is around 4.6. That combination remains encouraging, but it should be read properly. Equity strategies do not move in straight lines. Positive compounding is interrupted by negative months, sharp reversals and uncomfortable periods of volatility. The most recent dashboard is notable because the long-term equity curve remains constructive, even though the latest period includes a significant drop in portfolio value. This is where the discipline of a rules-based process matters. A momentum strategy will participate when leadership is strong, but it will also feel the impact when concentrated leadership groups reverse quickly. The objective is not to avoid every drawdown. The objective is to keep losses within a tolerable range, preserve process integrity, and allow the model to rotate as relative strength changes. The Nasdaq 100 backdrop over the last month has been shaped by two opposing forces. First, a strong first-half rally, led by AI infrastructure, semiconductors and selected megacap technology. Second, a sharp late June and early July sell-off in the same leadership complex. Reuters reported that the S&P 500 and Nasdaq recorded their strongest quarter since 2020, helped by technology and semiconductor strength. Reuters also highlighted that the second half of the year will test the durability of AI spending, earnings expectations and the interest rate outlook. In the previous week, Reuters reported a semiconductor-led sell-off, with the Philadelphia Semiconductor Index falling sharply as investors questioned the sustainability of AI-related capital spending. Chip-related names including Intel, Marvell, AMD, Micron and Nvidia were among those under pressure. For the months ahead, the correct approach is discipline rather than certainty. The constructive case is that earnings, AI infrastructure demand and liquidity continued to support higher quality technology leadership. The risk case is that valuations, crowded positioning, rate expectations, or earnings disappointment lead to further rotation away from the strongest 2026 winners. For this strategy, the practical conclusion is unchanged. Do not forecast. Do not chase. Do not override the model. The process should continue to rank, rotate and rebalance according to relative strength and risk behavior. At trade level, returns will remain noisy. At portfolio level, the relevant test is whether the strategy continues to do what it was designed to do, retain stronger names, remove weaker names, keep exposure systematic, and avoid emotional decision-making after either strong gains or sharp pullbacks. The latest update supports that interpretation. The strategy remains in profit. Risk-adjusted performance remains strong, and the current drawdown remains within the historical range shown on the dashboard. Current or recent example holdings include ARM, Marvell, Micron, AMD and Western Digital. These are examples of exposure, not recommendations. Positions may change as the model updates. Performance should always be read beside risk. The encouraging point is not simply the 101.5% cumulative gain since October 2022. It is the combination of that return with a controlled maximum drawdown, a still strong sharp profile, and a process that remains rules-based during a difficult week for the Nasdaq 100 leadership trade. Past performance is not indicative of future results. Investing involves risk, including possible loss of capital.